Good afternoon. So it's the end of the month, February of 2020, and it also just happens to coincide with the same week that all this coronavirus stuff has started to really catch on in the media, and supposedly is the reason why the markets are down, I think 8% in like 2 days. I'm not really buying that, but I mean, maybe it is, maybe it isn't, I don't know. I'm sure a lot of day traders are probably pushing buttons on this, but at the end of the day, I don't think it really matters that much, just in terms of the market. I think it's unfortunate for all the people that have it, but I mean, the numbers aren't that bad. I mean, compared to the flu. I mean, this year we've had more people die of the flu and more people contract the flu than this virus that's new. So anyway, but yeah, don't think it's the end of the world, but things were cheaper today. So the one thing I will say that I did this month, that I don't normally do, but because of actual economic indicators I did, was that I took about $110 and I purchased something called put options. And if you don't know what that is, so I'm not doing anything fancy. This is no level 4 strategic option strategy junk. But I did purchase a few options on a company called CarMax that is extremely leveraged. In my opinion, just looking at financials, they are extremely over leveraged. And as the supply of used cars continue to hit the market, there's a plane. But yeah, as the supply of used cars hit the market and rise, it's going to keep putting pressure on those prices. And that business is a very tight margin business anyway, just meaning that it's already difficult to make money in it. So you start squeezing prices. In any industry, you do that with a company that's over leveraged, and they're probably not going to make it. So I bought what you call leap options, which are 2-year contracts that would let me quote unquote sell it at $45 a share, which, keep in mind, it's trading at almost 98. So it would have to go bankrupt for me to make like a substantial profit off of $110. But I think they probably will if conditions get worse. And if conditions don't get worse, well, then $110 over the next 2 years, if I'm investing $1,000 a month, is only like 0.004% of my total portfolio. So it's just a little bit of money that I put to the side to buy insurance should, kind of like a worst case situation happen. And if it doesn't, well, then great. And I'll just, keep buying every single month and things will be fine. So, but let's say that things do get really, really bad and that industry keeps getting beat up and then the share price goes to zero. Well, so one contract is 100 shares. So if I get to essentially short or sell 100 shares at $45 a share and it goes to zero, well, then that means that I make 45 times 100, which is 4,500, which, depending on when that happens, but let's say it happens later next year and I've got roughly 24,000 invested, it's about 20-ish% of my whole portfolio. So it just protects some of that value. And it would also give me money to purchase shares at a time when I'm pretty sure the rest of the market will be pretty low. So it's kind of what people refer to when they say buying insurance. But let's focus on what I'm doing with most of my money. And I bought a little bit more of Southwest Airlines, same stock I bought last month, and a little bit more of Hennessy Advisors. I did add a few more names this month, primarily Goodyear Tire and Rubber, Magna, which is an automotive parts manufacturer and distributor, BMW. And why BMW versus Ford or GM or some of the other brands? Well, of all the brands, they're one of the best and they have the best fundamentals, meaning they have the lowest amount of debt and some of the strongest profit margins. So that's my decision on that one. And then you'll notice, and I'll put a list of everything I bought and kind of where my portfolio stands now. But yeah, you'll notice that it's kind of centered around the automotive industry, at least this month. So Goodyear, BMW, Magna, and the reason being is that industry overall has kind of taken a beating for the past 18 months. And so there's some really good companies in that industry that, along with the rest of it, have gone down. And so this is the kind of, I guess you could call it a strategy that I'll be using for the next 8 years, is just looking at industries that for whatever reason have been beat up, and then finding good businesses within those industries. It's typically where you find your best deals. And then, yeah, so that's about it. Keeping it pretty simple, but I'll post more like videos on kind of some of the metrics and Finance 101 and what some of the stuff I'm talking about means. But those are the assets I purchased. And what I'm going to say throughout the next, I guess, 8 years of doing these videos is that the biggest thing to look at is the income from the portfolio. So my thinking is that I can invest $1,000 a month for 8 years and create a portfolio that is producing anywhere between $40,000 and $50,000 a year. Now that's saying a lot, because if you think about it, I'm saying I'm basically investing just over $90,000 over 8 years, but that I'm getting a portfolio that's going to generate almost half that. And that's a pretty tall order, because I'm investing in companies that are stable and secure. So it's not like I'm, taking really huge risk. But I think if you find really strong companies that produce really well and you invest like this over that length of time, that's the results you get. So again, you might disagree with me, you might think I'm crazy, but we'll see in 8 years. But again, just showing you the sort of what's going on with the income. So every single month, and of course over time the increase will get smaller and smaller, but every single month the increase in that income should grow, because either the companies themselves should raise the dividend, or just by me purchasing more shares should increase the dividend distribution. And so the payments that I'm getting should increase. And so like last month, my projected 12 months was about an average of $3 a month, and after this month it's $6 a month. And even at that, it's kind of difficult to think about how that is going to go from $70 a year to $50,000 a year. But stay tuned, and yeah, enjoy the videos.